All right, what is going on, guys? Welcome back to a brand new video. Want to talk about this company real quick. DLO, funny name. I bought 740 shares of it. If we scroll all the way down, 700 shares at $14.50, went down, bought a little bit more at $13.38. And then it went up to $15.42, sold everything, took I think it was a quick like $800 profit or whatever. So not a crazy amount, but this stock has been up and down this past couple of weeks, up at 15, down at 14, up. But basically I wanted to make this video to let you guys know that if you have some capital, whether it's for long-term or short-term, I think this company is pretty undervalued. I think if we wait a little amount of time for the price to, right now it's at 15, 17, I think it can go back to 13. I think it can go back to 12, potentially even less. This would not be the most horrible buy. If we look at the numbers, PE ratio is not the craziest, and the net margin and the financials are, to be honest with you, doing better every single quarter and every single year. So if we look at right here, literally every single quarter, they're doing great. And if we look at yearly, as we can see, every single year it's going up. And this is a relatively profitable company. Like most profitable companies in the market, typically as time catches on, can do tremendously well in terms of stock price. Now this is 2024. If we do for 2025, I don't know what the numbers are going to be, but it's probably going to be way higher than 700. And scroll down, 16% net margin. So now if we go into cash on hand and their debt, if we go into their cash on hand and their debt, they really don't have that much debt in comparison to their cash. They have a significant, I would say, cash holding compared to their debt. So also really good sign. And their market cap is like 4 billion, right? Like that's not the biggest market cap, I would say, for a industry like this. If we do comparisons and whatnot, I think that as a whole, like I don't think it would be that difficult for that to double, in my personal opinion, obviously long term. But yeah, like I said, wanted to make this video quick. If you can get this stock, when it goes down, I think it will go down anywhere from $10, I'd say $11 to $13. Buy, a bunch of shares. It's essentially the same thing I did with Oscar Health. Obviously it's a whole different industry, but so this company was also, if we go to the year to date, there's a period when it was up here 15, 16, went down 11, 10, obviously a period you want to buy, goes up, goes down, and then hits 20, which I easily see this happening with this company, and then went down to 13 again. So I think with this company, wait a little bit longer unless you don't really care and you have capital, and I would say buy some shares. I think you will do tremendously great. The company is very healthy. And that's it for today's video. If you enjoyed it, give it a big thumbs up so it hits the YouTube algorithm. And yeah, that's it. Thank you.